Hey, it's Tom here and welcome back to the channel. So in the early 2000s, there was a paper that came out of the University of Nevada called Imitation is the Sincerest Form of Flattery. And this was a research paper that basically looked at the greatest investor in the world, Warren Buffett, and all of the publicly disclosed information that came out of Warren Buffett's investment vehicle, Berkshire Hathaway, every single quarter. And it asked the quite simple question: if you had simply just copied everything that Warren Buffett had done, you bought all the stocks that he bought, you sold all the stocks that he sold every single quarter, what would your own investment performance had been? And it's no surprise that when you copy the best investor in the world, you get pretty good returns, and you would have been cranking out about 20% per year compounded. The index itself did about 10% per year during the 30-year period they looked at, from 1976 to 2006. So even though the index did quite well, you were beating it by a further 10% per year and compounding at 20% annually. So I want to take that idea of cloning in the investment world and kind of run with it. And this is the first video in a new series that I'm going to be starting on the channel, basically cloning some of my own personal favorite super investors. It's a topic that I've been kind of pondering for a while, in a series that I've wanted to start on the channel for some time. But I did a recent podcast with Jason Rothman, the After Dinner Investor. It came out just yesterday, so if you want to go and check out that full-length podcast, it will be on the Investing with Tom podcast YouTube channel. Definitely go ahead and check that out. And Jason is an intense and ferocious cloner. He's not a shameless cloner as he used to describe himself. He takes this stuff very, very seriously, and he implements cloning in his own personal investments. So this video is basically going to consist of two parts. Firstly, I want to explain some of Jason's framework and his rules around cloning in his own investments, and how I'm going to apply them to this particular exercise of cloning some of my favorite super investors and building up a portfolio that I can share regularly on the channel. And secondly, we will have a look at the portfolio as it stands today. I'm going to take a hypothetical $100,000 portfolio, apply some of these rules that I will talk through very shortly, and then build a portfolio from that and track it over time using Sharesight. So Sharesight is the tool that I use for my own portfolio tracking, and it's a really great tool to track investment returns from capital gains, dividend income, and currency fluctuations if you invest internationally as well. So full disclosure, I am a Sharesight affiliate, so if you want to check out Sharesight for yourself, the link will be down in the description below. That link will get you 4 months free off of an annual subscription to Sharesight. But without further ado, let's get straight into it. Now, Jason's first rule of cloning in investments is to first define your Mount Rushmore of super investors. So for me, I have about 16 different super investor 13F filings that I look at every quarter. That's just too many to clone for one portfolio. It's too many stocks that are going to come across our radar. So we really do have to narrow it down to a small handful of super investors. So for me, I've managed to narrow it down to 6 super investors. So those are going to be Warren Buffett, no surprise there. Charlie Munger, also no surprise there probably. Mohnish Pabrai, Guy Spier, Li Lu, and Norbert Lu. So those are going to be my 6 super investors. Those are 6 portfolios that I will look at every quarter to see what they've been buying and selling, and then potentially implement some of those stock picks into this shameless cloners portfolio. Now, one of the other things I should say on our sort of Mount Rushmore of super investors as well is that I'm not fully closed off to looking at the 13Fs or the overseas investments or anything of other investors. So, for example, I've been following Nick Sleep a lot lately. Nick Sleep has a pretty small number of holdings. One of his newer ones is in a company called ASOS, which we think that he bought somewhere in the first half of 2020. So if a company like ASOS were to get back to pretty similar prices to which Nick Sleep bought into it at, that might be something I consider adding to the portfolio. And also of smaller investors with 13Fs that hadn't made this sort of Mount Rushmore list, I'll also consider looking at some of those holdings if I think they're compelling opportunities as well. Now, the second rule Jason has here is around price. So the 6 people that I've just laid out are all value investors. They're trying to buy great businesses at reasonable prices. So we do have to be cognizant of price. We don't want to pay like 3 times the price that a super investor paid for a particular stock. So Jason's rule is to only buy when the current price is within 30% of the low during the quarter in which that super investor bought. So if the price in a particular quarter for a stock was, say, somewhere between 20 and 10. We're going to assume that they bought at 10 because they're the best investor in the world and they can time it. So we would buy no more than 30% higher than that quarterly low. So on that particular example, where it trades between 10 and 20, we would buy no higher than about 13. Now I'm going to be slightly less picky here on price, so I'm just going to pick the midpoint in price on the quarter. All these super investors will also tell us that they aren't great at timing markets, so I'm going to pick the midpoint of price and buy at no higher than 30% of that midpoint price. And the final rule here from Jason, or more of a tip than anything, is to not forget to look back at previous quarters. So maybe a super investor bought into a stock and it went up 50%, so we couldn't buy it. It went over our sort of price threshold, but potentially they're still holding it, or they might be adding to it as the price comes back down to earth again. So we'll just be sure to kind of keep an eye out for if any prices do come back to earth a little bit, and we maybe get kind of a second bite at the apple on those companies. Now, in terms of translating those rules from Jason into an actual portfolio, I've added a couple of other rules from my end. So firstly, just in terms of the number of stock holdings, I want to have at least 5 positions. So the most concentrated that the portfolio will ever get is at cost at least about a 20% position in 5 different stocks. And I want to be no more diversified than 10 stocks. So kind of a 10 by 10, I suppose, allocation. If we start out with 5 stocks and kind of add other ones, I'll rebalance it a little bit. So I'll take money from the initial 5 and add it to the new 5 and so on. So that's kind of what I'm thinking with portfolio allocation. When we start this portfolio off, we're actually not going to have a full 5 ideas. So we may have a couple in there, and basically the balance of the portfolio initially at least will just sit in cash or some sort of cash equivalent like a short-term bond ETF. And finally, there are going to be basically 2 different portfolio weightings. So there's going to be what I will call a full position and a half position. So this is going to be based on, I guess, the conviction of the super investor themselves. So if they have a big chunk of the portfolio in a new stock, we will make it a full position, and if they have a smaller kind of chunk of the portfolio in a particular stock, we will make it kind of a half position. So that's something that we will also implement in the portfolio, and that's going to be my judgment a little bit in terms of how we weight these things, whether it's a full position or a half position, and I'm going to use my own personal knowledge of those particular investment situations as well to try and aid in that decision. Okay, so let's now jump over to the computer and have a look at both the 13F filings for our 6 super investors, and also let's look at the current portfolio in Sharesight so that you can actually see the positions that I've started to add with this hypothetical $100,000 portfolio. So I have our 6 13Fs open. I have Berkshire, the Daily Journal Corporation, which is Charlie Munger, so that's Buffett and Munger so far. We also have Pabrai Investment Funds. We have Aquamarine, which is Guy Spears Fund. And then we have also Lee Lu at Himalaya Capital and Norbert Lu at Punch Card Capital. So those are our 6 super investors. I've kind of worked through already and started to build out some initial positions in our super investor portfolio. So let's jump over to Sharesight and have a look at that. Okay, so we're in Sharesight now, and here is our $100,000 portfolio. So you can see up the top right there, we've already made about $100. So I'm in the Shannon Kleiner portfolio, and we're off to a reasonable start. So let me walk you through some of the positions that I've added to the portfolio already. This is kind of just an initial one, so we do still, as a bit of a heads up, have a big chunk of the portfolio in cash, kind of yet to be allocated, but we're kind of getting the ball rolling, I suppose. So if we scroll down and have a look at the first thing in here with Sharesight, is I have added a benchmark. So I'm going to benchmark this against the S&P 500 index over time, SPY. That'll be a nice little benchmark just to kind of check in on how we're tracking against the index. It's not something we'll pay attention to quarterly or even maybe annually, but over a very long period of time, that should be a useful indicator in terms of how this is performing. So the first position that we have is Berkshire Hathaway, and this is a full position. So a full kind of 20% chunk of the portfolio is Berkshire Hathaway. In terms of cloning, so obviously we have Warren Buffett at Berkshire itself. Now, Warren Buffett hasn't actually bought Berkshire Hathaway stock since like 1965 when it was $10 a share for the Class A shares, which now trade at like $400,000. But he has been doing a lot of share buybacks. So although those share buybacks won't show up in a 13F, that is kind of the way that I am cloning that. Aquamarine, Guy Spears Fund, does also have a holding in Berkshire Hathaway as well, but that was bought a long time ago, so that hasn't been added to recently. So if I go into the Berkshire B position and just have a look at that, this is kind of where things currently stand. So we've only got about a day of data. There's not a lot of performance information we're going to see in here. But I have had one buy, so if I click on that, that will tell us what we've bought. So we've bought 70 Class B shares at $284.21. So a clone of Guy Spear, actually Norbert Liu as well, he has Berkshire in there also, and Warren Buffett from his share buyback. So there is one rule that I didn't mention earlier, and that is one that is completely irrational, I would say, in terms of stock picking, but it is one that I've added. So in theory, this should be basically a $20,000 position. It's about $100 short of that. I've rounded up to 70 shares, so 71 might have got us a little bit closer, but I've gone down to 70 to have a nice round number because I'm not a psychopath. So that is one little irrational rule that I have in this portfolio. So that is first one is Berkshire B. That is a full position. We only have actually 2 other positions plus cash in this portfolio right now. So the next one you may have already seen is the Daily Journal Corporation. So this is a half position. This is actually a new stock that was added by Guy Spear at Aquamarine. So if we go over to Guy Spear's 13F, you'll see that it's a relatively small position, only about 2% of the portfolio, but it's a brand new stock. It's a situation that I'm familiar with as well personally. So the Daily Journal Corporation have their stock portfolio, which Charlie Munger manages, and they also have a software as a service business, which is kind of just getting started as well. So that is the kind of rough investment thesis for the Daily Journal, and I've made that kind of a half position, so about a $10,000 position in the portfolio. I'll skip over our short-term bond fund and go straight to the bottom. So here is the final kind of stock that we have in this particular Shameless Cloners portfolio for now, which is Alibaba. Again, this one is a full position. So if I go into that Alibaba holding, we have one initial purchase, which is kind of the full $20,000 position. This one, kind of the opposite of Berkshire, I've rounded up slightly to get to an even number of shares, 120 shares. And those were bought at $168 US. And finally, the balance of the portfolio is simply just sitting in a short-term bond fund at the moment. So that is what you will also see in here, the Vanguard Group short-term treasury ETF. So that makes up the balance. We've got close to $50,000 sitting in that at the moment. So that is about half the portfolio, and that will get allocated out to new positions and new clones kind of as the 13F data kind of becomes available and we see new holdings from our super investors. So finally, I'll just jump into one of the reports in Sharesight. I'll head over to the diversity report. So this will just give us a bit of a pie chart of the current portfolio, and it's pretty straightforward. So we basically have two 20% positions. We have Berkshire Hathaway and Alibaba as full 20% positions, more or less. We have the Daily Journal Corporation in there at 10%, and we have effectively our cash, our short-term bond fund, as about 50% of the portfolio right now. And if we scroll down on that report, as you can see, those are all the allocations, and the grand total of the portfolio is about $100,000 US. So that is an introduction to a new series on the channel around shamelessly cloning some of the best investors in the world. Let me know your thoughts on the series. I think this is going to be a fun one. Let me know what you think of it down in the comments below. And let me also know what you think of some of Jason, the After Dinner Investors rules for shameless cloning as well. So I think this should be an exciting one to track over time. I'm not exactly sure how frequently I'm going to do update videos on this. I think I'll certainly do one when I make a change to the portfolio, which might be maybe once a quarter, if that, just when the new 13F filings come out. Outside of that, in terms of looking at the actual performance, I think this is really sort of a longer term experiment, so I don't want to be making monthly videos on it or anything like that. Quarterly, I would say at most, probably annually or maybe even once every couple of years really makes more sense, but we'll check in on it every now and again just to see how the portfolio is tracking. So hope you did enjoy the video. Like I say, if you want to check out Sharesight for yourself, it is a great tool, so the link will be down in the description below to get you 4 months free off of an annual subscription there. But that's it from me for this one, and I will see you in the next video. Cheers.